And welcome back. A lot of questions about the tax legislation now signed by the president on Friday. And here's some of what we know about the $1.5 trillion plan. The law gives the biggest permanent tax cuts to corporations from 35% down to 21%. And as for individuals, we will also see tax cuts. The concern, though, down the road, cuts for individuals expire in 8 years, and Americans making less than $75,000 a year could see their taxes go up by the year 2027. Now, the law also repeals the Affordable Care Act mandate that requires every American to buy health insurance or pay a fine, and that means 13 million more Americans could be uninsured over the next decade. That could lead to increased premiums if not enough people buy health insurance. Well, joining us to talk about all of this are Matt Klaus from the University of Denver's Daniels Business of College and Carol Hedges from the Colorado Fiscal Institute. So thank you both for being here today. The president signed this bill into law on Friday. How soon before we see any benefits, any changes from this?
Well, I think we're going to see changes almost immediately. The bill will provisions will start to take effect almost immediately. And I know that yesterday when the Legislative Council talked about what it was going to mean for the state of Colorado, they were already factoring in those changes for the budget that the legislature is going to be dealing with starting in January.
It is going to start showing up in the withholding rates and the things that will impact your checks right away for 2018.
So January?
Yes.
You think we'll see changes?
Well, maybe February probably.
Mm-hmm. I think that the biggest concern that a lot of people have is that more people will be paying taxes, or people will be paying more taxes down the road. Explain how this all works.
Well, I think I think to think about this bill, I think it's really important that we think about it as a tax cut, not as tax reform, right? It was not a measure. It's been sold on simplicity purposes. It's been sold by making it simpler, and I just don't think that's actually what happens. I think that what we're seeing is that about 50% of the tax cut benefit in Colorado is going to go to the top 5% of income earners. And we'll see, everybody else will see, likely, most of us will see some sort of a change in our taxes. The question is it a benefit or not? Because we're also going to see dramatic reductions in federal support for programs like school lunches and long-term care for the elderly and the folks with disabilities. And so the impact, talking about benefit is a really complicated thing. If you talk about it only as tax cuts, that's one way of analyzing it. And you talk about what quality of life, it's a whole nother question.
But we're also hearing from a lot of corporations that are saying this is great, and they're already handing out bonuses.
Yes. Yeah, for corporations it's going to be good, and it will promote some economic growth. Lots of arguments about a lot of growth versus some growth, but it will be good for businesses, and if it's good for businesses, that will be good for employment, incomes, things like that. I don't think we need to worry too much about the fact that while the decrease in the corporate tax rate is permanent, people are concerned about the individual rates. They say it's not permanent. Between now and 2025, a lot of things can happen. And it really is a bit of a test. Let's see what goes on. Corporations need to know more certainty in making decisions, especially investment decisions that involve millions of dollars, which may happen, and that's what we want to happen with capital expenditures, job creation. Individuals, not quite the same, but a lot of things are going to happen, and it'll be looked at again much earlier than before 2025.
But that gets right back to the question of, is the benefit only a cut? I mean, what that means is that we're not going to have the kinds of things that a lot of families depend upon, like there's threats currently to the SNAP program, to Medicaid, to Medicare, to the programs that families actually depend upon. And one of the things that we know, if it were simply a matter of needing cash in order to have corporations make additional investments to make the economy grow, we wouldn't be in a problem. Cash is not the problem that corporations are experiencing right now. So the idea that many corporations, it's great. I'm glad they're deciding to use their money in the short term to provide bonuses. But one of the things that we've seen historically when we've seen these kinds of tax cuts over time is it has led to the concentration of income and particularly wealth in smaller and smaller numbers of people. And this kind of tax cut, these kinds of change that so much benefit the upper end, has a real possibility of enhancing that problem of concentration of wealth.
Will we see wages go up?
Historically, we have not. That has not been something that we can track. We watched what happened in the state of Kansas when they just recently cut taxes. So you know, a lot of people talk about it. The last big tax cuts were the Reagan tax cuts, and it was at that period of time when we started to see a change in the way we allocated benefits between wages and owners, between workers and owners. And increasingly, workers are not getting the benefit of
Mac,
those
you said
tax
yes,
cuts.
wages would go up.
Well, we will certainly see more employment. We're going to see more jobs, and that's the important thing. We may see more jobs, we may see better jobs. The job market is changing for a lot of reasons now, besides just tax issues, but you get technology issues and the kinds of jobs that exist. But I think there will be increases in wages. I think there will be increases in jobs.
But is this a lot of guesswork? I mean, we're talking about a record deficit here, and there are no guarantees. Is this a gamble?
It's the thing that bothers me the most about the bill, to be quite frank. That the federal government is the one organization unit that can that has some tools to help people out in the short term when we see the inevitable economic downturn. We just gave away many of the tools that the federal government can use, because we've seen in the Great Recession and in the Depression, we did things like increase deficit spending or to reduce tax rates. We just gave those away in a time when the economy is already expanding. This feels so very short-term, let's turn a buck today, and not thinking about the longer-term interest for the economy.
And we have about 30 seconds left, so Mac, I'll let you have the final say here.
Well, I agree with Carol that there are a lot of issues that this doesn't address at all. The income inequality issues, those are a much bigger issue than just changing tax rates and some of the tax laws. But we will see economic growth from this. There are a lot of good reasons for doing what we've done, and a lot of room for disagreement with people with different models and different forecasts.
Well, there's definitely disagreement. We see that constantly. Thank you so much, Mac Klaus and Carol Hedges. Appreciate your time and insight.